NIO shares fell 2.8% in after-hours trading on November 15th at 2:25 p.m. ET, joining a multi-car company pileup that cost Lucid Group more than 5% and sent Rivian Automotive tumbling 18% lower. You might be wondering why there is so much dropping, right? Yeah, today we're here to reveal that. So for that, watch till the end of the video and make sure to enable all the notifications to keep updated. Okay, so what's the deal? However, there is one significant distinction between these three electric car stocks. NIO stock has been range-bound for the majority of the last month. In fact, if you compare the stock's current price to where it was exactly 1 month ago, you'll see that NIO stock is only $0.01 higher. However, Lucid Group, a Californian electric car startup, has seen its shares nearly double in the previous 30 days. Compare that to Rivian, which has not had a single losing session since its share IPO'd 1 week ago until investors slammed on the brakes. COVID-19 breakouts in Southeast Asia's chip processing and assembly hubs resulting in a severe semiconductor shortage. Automobile manufacturers all around the world were compelled to decrease production due to COVID-19 restrictions at factories, port congestion, and other supply chain concerns, even though demand was increasing. Tesla's stock was beating its Chinese rivals by early September as consumer confidence in the car industry began to rise, after announcing record profits for the third quarter and news that auto rental business Hertz will buy 100,000 Tesla vehicles by the end of 2022. Tesla stock soared in October. For NIO, there was no such trigger. Uncertainty about China's regulatory risk puts investors on the sidelines. Additionally, on November 15th, US President Joe Biden signed a $1.2 trillion infrastructure plan, which contained a $5 billion package to construct electric vehicle charging stations and infrastructure. The electric vehicle industry is particularly well positioned to benefit, according to research firm IHS Markit, because funding will soon begin flowing to a variety of existing and future energy transition initiatives. NIO, a Chinese electric vehicle manufacturer, has yet to sell its vehicles in the United States. China's government spent less on EV subsidies last year, according to the International Energy Agency, as qualifying conditions for incentive programs were tightened. As of November 19th, the SUV-focused NIO stock is down more than 28% year-to-date, while EV leader Tesla is up more than 50%. NIO stock news and insights for the third quarter. NIO's fourth quarter vehicle deliveries and revenue outlook, which were revealed alongside its third quarter earnings, made investors shattered. Following the statement on November 9th, shares fell 6%. Total sales for the fourth quarter is likely to range between $1.45 billion and $1.57 billion, falling short of market forecasts of $1.74 billion. During the fourth quarter, vehicle deliveries were predicted to be between 23,500 and 25,500 units, marking a 4.4% drop quarter-over-quarter at the lower end of the range. Continued supply chain volatilities are expected in the fourth quarter, according to NIO CEO William Li Bin, who added that our teams and partners are working closely together to secure supply and production for the fourth quarter of 2021. Vehicle deliveries climbed by more than 1,005 units year-over-year to 24,439 units in the third quarter, in comparison to a year earlier. Quarterly automobile sales increased by almost 100% to $1.34 billion. In the third quarter of 2020, gross margin was 12.9%, but in the second quarter of 2021, gross margin was 18.6%. In comparison to a year ago, the net loss attributable for the third quarter increased by 140% to $443.7 million. NIO crucial pricing movers. Problems with the supply chain. Tesla stated in its most recent quarterly earnings report, released on October 20th, that a variety of challenges, including semiconductor shortages, congestion at ports, and rolling blackouts, have been impacting our ability to keep factories running at full speed. While sequential growth remains our goal, the magnitude of growth will be determined largely by outside factors. The competition is fierce. The competition among EV manufacturers is fierce, and it will only get hotter as more legacy automakers, new joint ventures, and bright startups enter the ring. Lucid and Rivian, two electric vehicle firms based in the United States, have lately made news. Lucid Group, situated in California, has seen its stock price grow by more than 360% since its initial public offering IPO earlier this year as of November 19th. NIO will begin a new manufacturing cycle on the NT 2.0 platform in the first quarter of 2021 with 3 new models including 2 premium midsize sedans slated to debut. Perspective on the Chinese market. NIO, a Chinese EV maker, could be well positioned to establish itself as a major EV player in the world's largest vehicle market. In its 2020 Battery Day presentation, Tesla labeled China's market critical to the EV sector. China has the widest offering according to the IEA, reflecting its less consolidated automotive sector and that it is the world's largest EV market. According to Nomura, BYD was the top EV seller in China in October of last year. Tesla, which has a gigafactory in Shanghai, was ranked 4th along with Xpeng 8th and Li Auto 10th. In October, NIO fell out of the top 10. Analysis perception of NIO 2022 through 2025. Automakers have experienced a significant downturn primarily as a result of COVID-19 related manufacturing closures and supply chain issues. In mid-May, NIO reached its lowest price level of the year, falling to $30.71. Chinese EV equities have fallen even more as international investor sentiment toward Chinese-based stocks has eroded as a result of Beijing's regulatory blitz. Is it better to buy, sell, or hold NIO stock? According to algorithmic forecasting site Wallet Investor, the stock is an excellent long-term 1-year investment as of November 19, 2021, and might grow to $67.58 in the next year. According to predictions, the stock might grow even more, reaching $72.26 by the end of December 2022 and $97.93 in December 2023. The price of NIO shares is expected to reach $151.50 by the end of 2025, according to them. According to MarketBeat's NIO stock forecast, the consensus price estimate for the next 12 months is $65.90 as of November 19th. The most expensive goal was $87, while the cheapest was $45. According to the average of 16 experts, the stock's rating is still a buy. 13 of them have buy ratings, while 3 have hold recommendations. Citigroup raised its price objective from $70 to $87 on November 11th. As of November 12, 2021, Nomura recommends the stock as a buy with a price objective of $71.1. When looking for NIO stock predictions, keep in mind that analysis projections are subject to error. Analysis forecasts are based on a thorough examination of a stock's fundamental and technical characteristics. Past results are no guarantee of future outcomes. So what's next? Now consider this. Assume you're an investor who thinks electric car stocks are the way of the future, but you're worried about the risk of investing in a firm with a lot of potential but no earnings. For investors accustomed to thinking of stocks with low PE ratios as cheap, high PE ratios as expensive, and no PE at all as risky, investing in a company that not only has no PE but also operates in a foreign market such as China, where the government frequently acts belligerently, and you have little insight how things really are operating out of the company on the ground, may be particularly unsettling. However, not 1 but 2 new electric car businesses, Lucid and Rivian, have gone public in your neighborhood. Sure, they don't make any money, but neither does NIO. They are, at the very least, American businesses. You're aware that the SEC will be monitoring their business for you and ensuring that their financial statements are accurate. In that case, would you be tempted to ignore the supposedly riskier NIO stock in favor of the more familiar Lucid and Rivian? Let us know in the comments.